Hi, I'm Will Mallard and welcome to another episode of My Property World podcast. Today we're sponsored by Landlords Studio and the panel lineup is phenomenal. We've got Christine Janaway, chartered surveyor, highly experienced expert in both residential leasehold and commercial dealings, and we're going to be tapping into her knowledge and experience in relation to making tax digital, which is the topic of today's show. And we're also joined by Logan Ransley, one of the co-founders of Landlords Studio. And he's got a list of social media comments about what's going on in the process for making tax digital. And Landlords Studio, of course, is a tool to make it easy for landlords to do the administration around, I suppose, the business side of being a landlord. Now, we've got expert comment from Ron Banerjee, who is one of the principals at Banner and Associates, a North London-based accountancy firm. Not only has he got a large landlord client base as an accountant, he's a landlord himself, and I was actually in one of his properties facilitating a move-in while he was off at the beach somewhere. So you're very welcome, guys. So we might kick off the discussion firstly with you, Logan. Could you share some feedback that you've got from social media posts about what's going on in the world of making tax digital?
Yeah, for sure. So this is quite interesting because we started creating some educational resources around making tax digital. And this was before they pushed out the dates several times. And we ran a couple of campaigns on Landlord Zone, actually, and they dished it out to their audience. And what we found is that there was a lot of comments and almost misinformation in the industry around what making tax digital is and the legislation and how it works and how to stay compliant, especially. So I guess as a summary, what we found is a lot of these users are finding information from various sources on the internet, not necessarily directly from an accountant or a tax professional, particularly. And we had all sorts of feedback around people wanting to use spreadsheets and people not needing to go on digital software or not needing to change the way that they operate their current business, and some questions and feedback around the revenue threshold or income threshold that they needed to meet before they could come under this MTD changes. So there's various different comments that we found, particularly from some of the social posts that we were creating. And I guess what I was quite keen to get is a bit more understanding from you, Ron, and the audience today, or the panel members, about debunking some of these myths and getting some actual proper knowledge and proper advice around these around the specific topic.
So Ron, over to you.
Yeah, so I think our experience with respect to making tax digital, we call it NTD ITSA, okay, just to confuse everybody, which is making tax digital for income tax self-assessment is what it stands for. Honestly, I think the first point to make is that, like with the first iteration of making tax digital, which was centered upon VAT registered businesses above the VAT threshold, there seems to be a serious lack of any kind of communication coming out from government about it. So we as accountants obviously are aware of it because of all the bulletins and information we get from HMRC and from the government, from our regulators, etc. But, and it seems like the government has basically unofficially, given it our responsibility to educate people about it rather than educating people directly. So, and that was the case at the beginning, and that's the case now, if you see what I mean. And that's the Making Tax Digital is a big program for the government with far-reaching, kind of points. And I can bore you with the raison d'etre for it, etc. But I think the real crux of the matter is that it's coming. It's coming in 2024. It was going to be 2023, but it's now 2024, and that's April 2024. And it's a matter of getting your ducks in a row about it, really. We in terms of social media posts, etc., what Logan was talking about, we haven't seen a hell of a lot of noise being made about it. Some of the software providers are making a rumble because obviously it's an opportunity for them to sell software to a new market, being individuals as opposed to limited companies. But at the end of the day, I think that, regardless of the lack of communication, it's coming, and it's a case of let's get ready for it. So I guess, our experiences firstly has been trying to educate our clients about it. So we've done webinars, etc. 2 webinars on it so far. And, I've also been on a number of webinars for some software providers as well, to try and educate people about it. So it does come as a bit of surprise to most landlords, whether you're a professional landlord, okay? So, and what I mean by that is, not teaching anybody to suck eggs, but you're reliant on that income as opposed to a passive or, kind of landlord, which is where you've got a portfolio, but it's not the be all and end all for you. It is whether it, the reasons for doing it might be for risk diversification, pension, or just because you like it as an asset class. So I think regardless of where you are on the scale of professionalism when it comes to property, nobody that we've done a webinar to, and we've done it to about, quite a lot of people. I'd say the first webinar had, a couple of hundred on it, second one again, and then the ones I've done with software, again, you're talking, hundreds of people on it. And then of course you've got the whole distribution that goes out thereafter. Nobody has, said, oh yes, I'm glad you're talking about this because, I was waiting for someone to tell me about it. Everybody's been like, oh, okay, there's another thing for us to do, is there? So, and I think that's been our kind of like experience. And we've been trying to, I'm a, glass half full kind of fella. So I approach anything, in that way. And I think that what the only good thing about this, and, this is very much kind of, personified in Landlord Studio, is that it's an opportunity for people to get their ducks in a row, for them to understand their property business, even if they do have a great understanding of it. It's in a format or in a place, in a visual where they could possibly do something with it. So it's not just about compliance, but the way I'm thinking about it is that, well, you know how much profit you're making, you know how much tax you've got, you know how much is left over for you to spend or reinvest, you know what your opportunities are for remortgaging and further expansion of your portfolio. And these are the key things in the age that we're in, the age of data. The more data, the better. So, like so many, of the big boys, and Google and Amazon, whatever, have got lots of data. This is an opportunity for us as, landlords to get data about our property portfolio, which even if we have it and we're a pro, it's in a nicer format. It looks better. We're not bashing with spreadsheets, where simplifying and making it more efficient, bank streams, etc., things like that, which Landlord Studio and other softwares have got all in place, presenting it in a way that, you know.
And I think that's a really key thing, like for the vast majority of landlords, even those that have made that sort of step into being full-time professionals, which ultimately is what the government has explicitly come out and said their agenda is, that they're wanting the people who are owning homes which are rented to operate in a compliant and professional manner, not just in tax, but in all sorts of other things. Most people don't have a predisposition to using technology in an advanced way, and you can see it in all sort of streams of life, where if you've got a simple interface, it might not do anything particularly different or more valuable, but people will use it because that they can add a couple of clicks, they can see what's going on. There's a dashboard, there's a display that highlights or puts a reminder up, and those types of things. I think it's certainly the way the world's going. But you've got like this. There's two worlds within property where you've got a huge number of what are effectively I'd regard as amateur landlords. They're often termed accidental landlords, or people who are operating, and they've put a fair few of their eggs into that one basket. They've got a property, they might have 2 or 3 properties, and they're renting those properties out, and they're in their own mind, that's their pension. And most people, when they look at the business as opposed to the assets and the income coming off those, will look at the business as an outsider and say, this is not a real business. This is a guy or a lady who is operating as a complete amateur, and they're not doing it optimally, they're not doing it professionally, and they're and quite often potentially being I suppose dangerous, both in terms of a tax compliance, but also within the physical asset. Now, Christine, I'm going to get your view on this, because I think more than any of us, you've been a landlord down to, there's a individual buy-to-let that a flat that you're leasing. You've been involved in service accommodation businesses, but at the same time, you've run real estate organisations that have had several hundred branches across the UK. You've acted with large institutions. What's your view on all of this?
Right. So my broader view, if you like, is that the government have been trying for quite a number of years now to force out what you term amateur landlords, and making tax digital is another, I'd say, a nail in the coffin, not quite that dramatic. But Will, I have a lettings and management agency that I own across the North Cotswolds, and I know my clients, a lot of them, firstly, they don't know about all this that's coming up if they are what you'd call, small portfolio landlords. And secondly, the ones that have heard of it are just like rabbits in the headlights, quite honestly. And I think they feel victimized, they feel neglected, there's all sorts of emotions running through all this, and especially a lot of my clients who are older, if I dare say that, none of them are old, but older, they don't really understand all this, and they think it's like Big Brother, literally like Big Brother. But I try to persuade them that actually getting everything on a proper professional footing makes their life so much easier and so much more straightforward, and it protects them in so many ways from tax investigations or whatever it is that they're scared of. that they can protect themselves by having some professionals looking after their interests and doing everything in a compliant manner. Yeah, I think it's going to take quite a lot of not persuasion, because they've got to do it, but it's going to be, there's going to be a lot of resistance, I think, from the smaller, the landlords with smaller portfolios. They just, some of them may go, do you know what, I just don't want to do this. It's a step too far. But if we can guide them over that hump, I think on the other side, they'll find life's much easier, more straightforward and less scary. Ron, I don't know what you think about that.
I would agree. I think there are a lot of people that, a lot of landlords that are, hesitant. And look, every single time there's something which we have to do whereby we're giving, more of ourselves up. I know that sounds a bit dramatic. People are always going to take, umbrage to it and not like it, right? Because, it's that case of like, well, why do I have to do this? And, this is my thing. And why should I have to share it with anybody, with the government? And that's why I think it's, important. And I do, think that there will be some landlords who, depending on their stage in life, might well think about.
That's a much nicer way of putting it.
It's, depending on their stage in life, might well think about, things in a different way. It's got to be said, even accountants, when Making Tax Digital came in, originally, before it's, it's in its, effectively, this is the third, stage of it. Many accountants were saying that they can't be bothered because it's technology. And again, there are many accountants who are at various stages of their life, and they didn't want to have that learning curve, didn't want to have those conversations, and for lack of a better way, could not be bothered. And they exited and whatever else. And that might well happen here as well. I think that, the point is, not the point is, I mean, the government's doing this, and I definitely agree with you, Christine. I think the government's doing this because I think this government doesn't like the idea of anybody owning more than one house, okay, or one home, or one building, whatever you want to say, okay? They don't like that idea at all, and they're trying to, dissuade people from it. So amateurs, really, not so much, or the people. I liked your phrase, the small portfolio landlords. I think that's much better than amateur. So they're trying to dissuade small portfolio landlords because
I think you guys are far too polite. And this relates to essentially is being a landlord a business or not is the question.
Exactly.
And in my view, yes, it is. It's a highly regulated activity. It's probably after food production and maybe hospital healthcare related stuff, the single most important safety
It's interesting you say that, Will, because the other thing that landlords, small portfolio landlords, cannot get their heads around is all the regulations. There are over 170 pieces of legislation that govern just
and there's
renting
more and more coming out.
And they just cannot get their heads around it. Even simple things like what you can actually ask the tenant when you're qualifying, vetting them, is just a minefield, quite honestly.
I agree more with Christine. I think that there's a massive gap between what we or what some people think about owning property, being a business, which is absolutely 100% correct. There's a lot of regulation, there's a lot of things, and what the reality of someone's perception is, because someone's perception is that it's it's bricks and mortar, it's a safe asset, it's going to appreciate, it's almost relatively liquid as well in some ways. Obviously, there's 101 different, kind of permutations and things to that statement. But, and they think about it like that. They don't think about it in terms of what you were saying, Will, in terms of it's a highly regulated, it's the most, important thing, because at the end of the day, you're providing a roof over someone's head, which, is a big deal, right? And there's, there's hundreds of things, if you're just thinking about it from a building regs perspective alone, despite the whole landlord and everything else and all the other regulations that go with it. But the reality is that, I think the small portfolio landlord, sometimes doesn't understand that. I think less of them so, I think more do get it, but it's still making them understand that you've got a business. I mean, as you well know, I suppose you've all experienced, is that some of them don't even have a separate bank account for it, right?
Yeah.
And I think that for us it has been the first stage in the education process, is that have a separate bank account. Because if you're a limited company, you've got to have a limited company bank account. So if you're a landlord, you and it's a business, you have a separate bank account. So I think that's, step one, and then step two is then, and I think at the end of the day, step two would be to kind of make them understand that it's a business from a perspective of like, well, when you're presenting something to someone, you've got to think about it from a positive, you've got to make them realize how this is going to benefit their life, right? Because at the end of the day, what I always do is like, yeah, it's horrible, it's rubbish that the government's doing this, they want more information, big brother, why more money as well, because you've got to engage professionals, you might have to pay for some software, whatever might be the case, plus you're changing your behavior, you're changing the way you're doing something, which is fundamentally one of the hardest things we as humans find to do. But if it's going to benefit you, if at the end of it, at the end of the year, you're like, gosh, I've got lots,
I think one of the classic examples is if you think about people who operate in the cash economy. So instantly you can think of a tradesperson dealing in cash, and it's under the radar of the tax authorities. And from their perspective, they think this is a great thing. And then you start thinking about, well, when you don't have declared income, what's your ability to leverage that? What's your ability to then go and get a mortgage, to get another property, to get and it's totally taken away. And what seems a significant chunk of your income going away in tax, it pales into insignificance in terms of the implications about what you're able to do and the value of that cash flow or income against your everything else that you can do within your life. And it just, in my mind, that kind of sums up, and I see it all the time with what and I'm going to move from amateur to small time. I'm not going to go as far as small portfolio landlords. I had a guy ring me a few weeks ago for some advice about how he could sell a house that he had operating in order to purchase a larger property that he was going to redevelop and create an uplift. And in a nutshell, what he'd done is he'd brought a property, operated it as a serviced accommodation business, but he'd brought it on a residential mortgage, which is completely, I think it's illegal. It's definitely against the terms of the mortgage contract.
Yes.
And he, not only that, he wanted to get a valuation based on the serviced accommodation rental profits. So what the income was coming in. Now, there was a further problem in that he hadn't done any accounts on the serviced accommodation business. So it was, okay, it wasn't even amateur hour. It was like a comedy, but basically. Now, I referred him to a bookkeeper I know to make a start on this, and suggested that he needed to port across to another mortgage product pretty sharpishly. He certainly had an ability to do that and to take his time, get his business in order, and get it presented in a way that it could be valued, and he could take that additional value that he created and then implement the plan. And that property deal that he was wanting to put the money in, it's probably be gone by that stage, but there's always another one. Now, just at a very basic level, Logan, what do we actually mean by digital records? I know we're half an hour into the chat and we haven't even said,
Yeah.
what is this?
Let's decide what it is we're actually talking
What are
We've
we
gone on a
talking about
tangent. Well, actually, that would be a question I'd like to ask Ron, but from our perspective, digital records basically means, rather than keeping everything in paper receipt form, it's actually keeping it in digital form that can be traced and then ultimately transferred into some sort of software or bridging software that can help the landlord then file the tax return with the HMRC. So that's from our perspective. From your perspective, Ron, does your opinion differ on this, or what's your understanding of what a digital record actually is?
I agree with you, Logan. It is that would be the definition of digital records, is keeping something, in a format whereby what the actual definition or the kind of definition of making tax digital is that there should be a digital link between the numbers that are filed with HMRC. So a digital link, meaning that there is some kind of evidence behind each transaction. Now, that evidence can be in the form of either a bank statement, which has the transaction on it, digitally presented. And by digitally presented, what I mean is that, it's an original bank statement. It's a direct download or a bank feed. Open banking has made things a lot easier. And with respect to expenses, on the sale side, it could be the bank statement, it could be an invoice that's raised. And on the expense side, it is actually the receipt, of the purchase. Remember, give you as you all know, just because you paid for something from your bank account doesn't mean that you own it. Okay, that's just proof of you having paid for it. The receipt is the proof that you have owned that service. So that's why the receipt is important, because you could be paying any Tom, Dick, or Harry from your bank account for anything, but there's no proof of what you've got in return for those or for that payment, and that proof is from the receipt. So it's having things in a digital format, so you can literally provide a digital link between the numbers you're presenting to HMRC. So yeah, it is exactly what you said, Logan. Just adding some accountant speak in the mix.
Gotcha.
And what about properties held in partnerships? So we're all involved in partnerships of different types. But
regardless of what
the classic example is two friends or two siblings, and they're involved in their own things, but they've also got a partnership, and the partnership owns the property.
I think that this comes back to what you were saying before about it being a business. If the partnership is a business, then there'd be a partnership agreement, and there'd be a separate kind of bank account, etc. to do for each partner. So I think the way that HMRC approaches these things is that you can cut the pie in whichever way you want, but at the end of the day, the pie is still the pie. So at the end of the day, you're still a business. You still need to keep records, whether it's in the guise of a partnership, an LLP, if you're doing it in your own name, or a limited company. As you said, for them, they're trying to equalize the playing field for all of the various types of entity or means by which people can do business. So I think what it does with partnerships is that I think partnerships are even looser than small portfolio landlords, maybe. So they're probably really like at that end of the scale. You probably can't see my hand there, but anyway, that end of the scale. So and I just think that I think it's a much more difficult conversation, for them, to be had. But in answer to your question, well, from the HMRC perspective, playing devil's advocate, they don't care. That your partnership and it might be a bit more difficult to do.
And what are the penalties involved in this sort of thing?
The thing you've got to remember, wouldn't know, but just to let you all know, as you might know, HMRC has a policy, year one, there's never any penalties. There's never anything that's done in year one of introduction. So what am I talking about there? Just to put some dates and, facts into here. So it is being implemented from the 6th of April 2024. Okay, so from there until the end of that tax year on the 5th of April 2025, there will probably be no penalties, no interest, nothing. No, just a letter saying you've got it wrong, get it right. Okay, that's how it's usually done with HMRC. I only caveat myself by saying that they might change that only because they often give a long time. They're really trying to get people enrolled now, okay, in various pilot programs for the next 2 years. If they successfully hit, they've probably got some KPIs and some metrics they've got to hit there. And if they doubly do that, they might rescind the no penalties in year one kind of policy that they usually have. So, but in all the other MTD introductions and for RTI, which stands for real-time information that was implemented for PAYE payroll a long time in 2016, there were no penalties in year one. So
and in terms of like the pension side of things, a huge portion of people would think about their property as being their pension. And some people have been smart enough to actually set up their pension fund and either lend money or buy directly or get involved through a tax efficient scheme where they can get the money from their pension into property and then take profits or find a way of funneling money back into their pension tax-free. All of that falls under HMRC's directions. So going digital, like in my mind, it's a no-brainer that'll help you make good decisions, but you're getting good advice and getting good software around that is going to be crucial.
Yeah, I think that getting good advice, first things is, I guess the first stage is acceptance. So I think the first thing is you've got to accept.
It's got one of the 5 stages of grief, I would say.
Exactly, that's what I was going to.
Stop the hatred towards the government.
Yeah. So acceptance. Then it's a case of understanding. Then it's getting the advice to be able to put into place the systems and the software that you need, to be compliant. And also, I think concomitant with that would be the advice around how you can possibly use that data to help you. So whether for us, obviously, we've already talked about it. We've talked about one quite heavily, which is about the fact that, potentially remortgaging, potentially expanding the portfolio. The other thing is that, remember, I said knowledge is power. Knowing what your tax bill is going to be is a very powerful thing, okay? Because we're sitting here now on the 23rd of November, 31st of January is the self-assessment deadline. Christmas is around the corner, which is going to be the first Christmas, in 2 years, right? So you're potentially going to have a huge tax bill, which you don't know about even today for some people. So, and you've got all this expenditure coming up, Christmas and everything else. And of course you're skiing in January, right? And so with all of that, that is also a powerful kind of message that we are giving our clients, is that, well, you're going to know what's coming up, okay? And you're going to know it. And, you know, you don't even, you know, you still need to ask me, but you don't even need to ask me, you know? So, you know, in one sense, what it's going to be. So I think that, you know, that's the other kind of key message to that. Now, look, by the way, I'm not working for the government. I don't work for HMRC or anything like that. So you might be saying, oh, well, you know, Ron, you're really being very positive about it. Like I said, I think you have to be. I think, you know, at the end of the day, you get through those stages, okay? You know, you can't do it in a doom and gloom kind of way. If you're doing it in a doom and gloom kind of way, exit, you know, just go. But for those people at that stage in their life, when they're small portfolio landlords, it might be a good opportunity to exit and realize your equity, or, you know, realize your capital gain. Obviously pay it within 30 days as well, but you know, it's better to do that so that you can then decide to maybe go for another asset class, you know, one which isn't so labor intensive for you, but might carry more risk.
Ron, yeah, interesting, because what I'm thinking about, some of the smaller portfolio clients in our business, they haven't, one of the reasons I think is that they're very nervous and sort of, oh my goodness, you know, what's happening about all this, is because they haven't actually done any proper tax planning. So to me, that's the first stage. Do all your tax planning, speak to somebody who really knows what they're talking about in terms of pensions and whether you should hold your properties in a limited company or your own name and all that, depending on your personal circumstances. Get all that sorted out, because to me, the making, you know, I've got a VAT registered company, so it's sort of, well, that's how it's done, isn't it? That's how we all do it now. You just, you know, the software hums away in the background, and then someone presses a button and it whizzes off to HMRC and all the rest of it. So if they did their proper tax planning first, then the making tax digital bit to me is just the way you tell HMRC what's going on. It's you know, you should have been telling them that in the old-fashioned way, maybe with spreadsheets and, you know, manually entering it. But it's just a different way to tell them. That's all.
Yeah.
But the outcome of that is that, as you say, you get all this extra really valuable information about your portfolio and your upcoming liabilities, and, you know, the returns on your investment and all sorts of stuff that you would have to crunch numbers for hours.
I'd compare it to jumping in a car and not knowing what the level of petrol is, not knowing what speed you're traveling at, not knowing what the temperature of the engine was, and, you know, and wondering what might go wrong.
It's kind of working.
Yeah,
but the engine
feels like we're okay.
I think the upshot of all of that is that, you know, you need to talk to an accountant, you know, at the end of the day. So, you know,
Do you know any good ones, Ron?
Yeah. No, they don't exist, mate. It's like doctors, you know.
This is actually like I think symptomatic of society again and again, and a commonly held belief that technology reduces employment. And when you think about office buildings, if you went back 40 years ago, the rise of computers, it was going to be, you know, that there was going to be no office workers required anymore, or it was going to be 90% of them would be gone, and so the need for your office space would be gone. But what's actually happened is all those office workers are now working for computer companies or computer sales companies or software companies, or and you look in any city anywhere in the world, or certainly in the Western world, are there more office buildings than there were 40 years ago? Yes, probably twice as many in terms of office space. Huge towers going up, filled with workers. And has technology gone ahead or backwards in that time? It's gone beyond comprehension in that time, and it will only continue to do so. And I think it's a good thing. It makes it easy. Now, I've got to make a little plug for Landlord Studio here. What about approved
Thanks, Will.
software, Logan?
So yeah, just speaking to, I actually want to tell you a little story about one of our customers that came on to Landlord Studio, and it goes back to understanding the finances of business and why that's so important. We had a guy who was basically managing everything on a spreadsheet. He had 15 properties. They're on 15 different spreadsheets. And it was about time he transferred into a new software because he was getting to that stage. And his accountant was basically pestering him to do it. And the accountant was trying to drive him towards zero more so than anything. But anyway, once he had loaded all his information into Landlord Studio and ran one of our reports, he noticed that he was only making £5 per month in profit, and the expenses on one of his properties were significantly high, that he was almost losing money on it, but he didn't realize at all. And it just kind of just goes to that point of how important it is to know your numbers, especially when running a property business, and how important it is to use tools in order to do that as well. So I guess what we've helped them do is to do that. And I guess in terms of making tax digital, we are building
Can I ask a question?
Sure.
It's only a £5 a month to get started on Landlord Studio with a property. Did you take that guy's last £5 of profit?
He was break even by the end of it. No, I won't tell his name either. We'll bleep that one out.
That would be cool.
But yeah, so Landlord Studio is essentially in the process of making a product that is making tax digital. There are a number of them that are listed, and they do it in different ways. They do it through Xero or Sage or QuickBooks integrations, or they do it through direct HMRC integrations, or they allow the data to be exported out and then use the bridging software to then allow the accountant to then file the tax return. So what we're doing is just looking at that, all the different options and what is best for our users. And we're looking at an integration into accounting software for the Q1 of next year. But essentially what we do is digitize everything and import bank transactions to help users reconcile them against properties, therefore making their property portfolio business just much more organized.
Okay, I've got a very quick story to finish off on. Being in New Zealand,
Bill, your stories are never quick. Your stories are never quick.
Okay, well this one's relatively quick. If you let me get started.
Let's hope this one is.
So,
looking forward to it.
A couple of weeks ago, the All Blacks, which is the New Zealand rugby team, was playing against Ireland, and I was in North London, and where I was at the time of the match, the only place I could find that it was on the TV was this pub in Kilburn, which is known as an Irish immigrant suburb, you know, going back a number of years. And so I end up in this, what some people would regard as a reasonably rough old man pub, in simple terms. And so I'm watching the match, and the All Blacks are getting bet out the door, and there's all these old Irish guys sitting around me. And what I saw was several things. So they were all incredibly racist. So there was an English referee, and he was being called every name under the sun, any call that didn't go Ireland's way. And they were racist towards the New Zealand players. And then when they found out that I was a New Zealander, that they were quite nice to me because Ireland was winning. But I was in this incredibly unpleasant sort of environment. But was looking around, and it was a snapshot of life where there were these guys, and maybe I have this wrong, but they'd obviously come over from Ireland. They still had Irish accents. Most of them looked like they were in their 50s or 60s, and a couple of them maybe their 70s, and they were broken. They were physically broken. And I thought that there were two things that went through my mind. One was, as a society, we've got to look after people who have built the roads, built the houses, laid the bricks, dug the holes, because if you don't have people to do that, you don't have roads, you don't have houses, you don't have walls. None of those things happen without people physically doing it. And you've got to look after people at the other end of that. Now, they were, as a group, you could pick who had put a bit of money aside. Like, it was very easy how they dressed, how they were interacting with each other. And it summed up in my mind that the need to prepare as an individual for your life afterwards. And, you know, when you're unable to produce income. And in those guys' case, it was all around, it appeared the labour that they had expended, the physical hard work. Now, as a society, we've got to look after people who are getting a little bit older. And as an individual, if you want a higher quality of life, because it was really clear to me that was the highlight of a couple of these guys' weeks, that they were down and they were having 2 or 3 pints on a Saturday afternoon, watching Ireland beat the All Blacks, and that was the extent of joy in their life. And I could see how they would be going back to, you know, not the greatest living environments. And as individuals, we all have choices. And the choice that I took away from that was basically to reaffirm that property investment's an incredibly effective strategy, but you've got to approach it professionally. You've got to involve people who know the stuff you don't know. And I'm yet to meet someone who knows it all, or even a fraction of it all. Sorry, Ron, I know I know you're up there, but so just once again, thank you so much. Just a closing comment from each of you. Logan Ransley, Landlord Studio, which you can find at landlordstudio.co.uk. Closing remarks?
Great to be here and very insightful, Ron. I think there was a lot of value there that actually people just not really sure about and they don't understand properly. So I think you shed some light on some of these key issues here. So appreciate that.
Thank you very much. Yeah, no, thank you, everybody. It's been really, really good to get everybody's.
So before you finish, Ron, the website, how can people get hold of the firm?
They can get hold of me
when they need a really good accountant.
If you need,
and you'll be able to refer them on to one.
The best in the industry.
If you need a really good accountant, don't call this number. But if if there's anything I can help anybody with, you can. The website's www.baneracc.com. And you know, there's a way to contact me there. I'm on LinkedIn, Ron Banerjee, and you know, I'll give you my email is you know as well, is ron@baneracc.com. So if you need any help, you know, with making tax digital, with anything really, you know, tax related, you know, we do lots of things. But I think at the end of the day, the key takeaway is always be positive, get your software in place, and talk to a professional who's able to advise you about it all. And you know what, you know, it's not the end of the world just because something new's coming in. Expect and embrace change. So
Good for them.
Fantastic. Thanks, Ron. And Christine, as the ultimate property professional that I know.
Okay, yeah, it's interesting, isn't it? Because when you talk to landlords, especially small portfolio land, there is a lot of resistance. But the education process, I think, is going to be quite a hill to get over. But these sorts of things help enormously. Firstly, because it shows that not only accountants, but even people who own managing agents are actually human beings and not faceless bureaucrats. Like Ron said, sort of they fear we're standing here for the government to interrogate and take all their money off them. But also just the compliance aspects and just making sure that you're doing what you're doing, in a good way, which is actually to your advantage, not your disadvantage. So, yeah, if anyone wants to get a hold of me, the easiest way is christine@cjresidential.co.uk. And yeah, I'm on LinkedIn and the usual places.
All right. Well, thank you once again. Another episode of My Property World. This one sponsored by Landlords Studio. Thanks again, guys. And we'll sign off now.
Appreciate everyone joining. Great to meet.
Cheers. Speak soon.